Well, it's our final mortgage minute of 2025. So Frank Napolitano is here from Mortgage Brokers Ottawa. And 2025, of course, I think the big thing we saw is rates going down.
Yeah. You know what? I mean, we were hit and miss at the beginning of the year.
Yeah.
Obviously, there was an American election, and President Trump was going to come in, the tariff war, which is still ongoing, it feels like. But Bank of Canada did the right thing and dropped interest rates. They saw the Canadians were struggling, and the inflation report came out yesterday, and good sign where inflation remained fairly steady. Food prices are up, and we were just talking about it off the air where it feels like it's more than 4.7%. It feels like significantly more. So again, I think Canadian families are going to struggle and are going to continue to struggle when it comes to the cost of everyday items.
So now that we look forward to 2026, what do you think we'll continue to see in terms of rates, mortgages?
Yeah, I mean, 2026 is a huge year because there's many Canadians that took a mortgage out 5 years ago when we were right in the middle of COVID and interest rates were at historic lows. So now we've got Canadians that have mortgages at 1.4, 1.5, 1.6, looking at 3.8, 3.9, 4%. And that's significant amount of interest that's going to accrue on the mortgage. The payments aren't going to go up that much, though. There's still many people that think their payments are going to double or 2.5 times. Payments will still go up $300, $400, $500, and when you top that off with the fact that groceries are more expensive, utilities are more expensive, life is more expensive, it becomes challenging, and it will be challenging for many Canadians. So analyze your financial needs and get in front of it. If your mortgage is up in May, don't wait until April to do something. Maybe start in January or February, whether it's connecting with your bank. Now, your bank is going to try and get you to early renew your mortgage, which means giving up your 1.59, 1.69 to secure a rate now. I don't think I recommend that unless anything changes. Right now, it feels like interest rates are likely going to remain stable or maybe come down. So I think you're better off to wait, but I think it's a good idea to start 4 months ahead of time. Get some advice, get a second opinion on what you should do. Maybe you want to keep your payments the same, so you rejig the amortization a little bit. There's options out there.
So for people who are still struggling, even maybe now, even they don't even have a mortgage up for renewal, are there options still available for them? Yeah,
let's find out how much equity is in the property. Let's see what options are available. And maybe it's adding a second mortgage. Maybe it's getting a home equity line of credit. Or maybe it's just going to a bank and, myself, I mean, I coach people on financial stuff, whether it's mortgage related or not. I'll try to give them mortgage advice, obviously, but also some loan advice as to what to do to try and get that debt together so that they can prepare themselves for whether they're buying a house or whether their mortgage is up for renewal, prepare themselves better so that they're in a position to move forward, because it feels like a lot of people feel like they're on a treadmill and not getting ahead anymore.
Do you think there's ever going to come a time where we are going to be able to move forward and things will kind of settle? Because it feels like it's just been so up and down over the last few years.
Yeah, but there's been some good. I mean, the GST and the HST, the HST rebate on new homes, I think that's a start. I think we're starting to see more affordable housing. So instead of someone having to pay $600, $700 for a townhouse, hopefully they could start off with a $400,000 or $500,000 and build some equity there, whether it's an apartment, maybe not a condo or something that's got low condo fees. For single people, it's extremely difficult. Like, I find that mortgages now, there has to be two people involved. Very rarely can a single person buy a mortgage on their own anymore.
But there are some options for people. I know we've heard of, friends buying a house together, or buying with a sibling, or maybe your parents, help you buy a new house with you as well.
While parents are in, or a sibling is in on 30 to 35% of house purchases, first-time home buyers these days. So, and that number continues to go up. But, friends buying homes together is a good idea, but make sure that you get the legal documentation in place. Should the friendship go south, what happens next? Or should one of the friends decide they want to move on? Like, how do you, do you sell the property at that point? Make sure that you have that conversation before you go into it with a friend, for sure.
So overall, moving into 2026, do you think we have more positive news ahead?
I hope so. I feel like we do. I just feel like there are some headwinds coming our way. I think inflation's under control. I think GDP is still going to remain low. And I think unemployment's going to go up. So I think the unemployment rate's going to go up, and that might force Bank of Canada to maybe give Canadians a little bit more of an interest rate break moving forward. And then south of the border, you've got Donald Trump that is trying to assign who the new Fed chair is, and he wants the Fed chair to advise him before they make any decisions on what to do with interest rates. And if we know anything about Donald Trump, he'd like interest rates to be at 1%. So if that happens south of the border, there's a good chance that in Canada we'll start to see lower rates as well.
Wonderful. Well, thank you so much for joining us today.
Pleasure.
And we'll see you in the new year.
And Merry Christmas, Happy Holidays to everyone.
Yes, absolutely.